Hey guys, so welcome back to my channel, and in this one we're going to be going through the only three types of order blocks you need to know. And of course, for those of you that have actually been, watching my channel for quite a while now, you're probably going to understand that this is quite familiar. In particular, it's one of the first videos where I would really say everything started to pop off. Now, if you guys were following me since last year, obviously, you can clearly see it's been a whole year now that I've started this channel, and then since then it's just been growing and growing. And I really wanted to go back to this video, actually analyze it, see where I could actually improve upon the points that I talked about. Because of course, with Forex, it's an ever-changing thing. You have your strategy in place, but always keep testing it. And there's just a few things that I wanted to refine a bit further with you guys, especially with this whole concept of the three order blocks you need to know. So in this lesson, what we're going to be going through, we're going to be going through again the three types of order blocks, but then going into more detail about high quality order blocks. We talked about the three types, but what's a higher quality one versus a lower quality one? And then the best way to actually enter them as well. Because of course, in the last time I did show quite a few ways we could. And then of course, without going into the live charts, that wouldn't be a complete video. So yeah, guys, in this video, we're going to be talking about, when we're talking about the three basics of trading, the way I really like to break it down is three things. Whenever you look at the market, whenever you're doing your entries, as in your analysis, you always want to look at things in this order. Market structure is always first. I would generally say this is even more important than any type of order block you can know, any type of entry strategy. As long as you understand market structure and understand where price is actually going, of course, that's very influential. Then liquidity, and then finally entries. Of course, besides all of this, you do have fundamentals, which is which is quite possibly even more important than all of this technical analysis. But when we're just talking about technicals, this is exactly what we're going to talk about. So, part one of the videos, the three types of order blocks we need to look at. So I just want to remind you, the three types that we did talk about last year when I did release this video. You got the first one, the standard type. With this one, it's pretty much the last up candle before the down move. It's a very simple. You guys, for those of you who are new to my channel, look through every single one of the other videos, especially the beginner types as well, because this is going to be slightly a bit more advanced compared to what you may have seen in the first version of this. But the standard type is pretty much just as simple as this. In terms of the engulf type, is going to be that order block at the extreme. So what happens is it could be any up candle, it could be a down candle, whatever it is, but the next candle needs to engulf it completely. So what I mean by that is, as you can see, this red candle over here completely covers the body of the last one and also the wick as well. So yeah, once we get that, as soon as price starts to retrace up, that would be where the entry is. And then the third type is the breaker type. This one pretty much is as close as you can get to support and resistance within smart money concepts. This is something that I use sort of less often than the other two. But when an opportunity does present itself and all my confirmations, and of course, there's no reason not to enter on it. But yeah, just a quick overview of the three types that we talked about. Now, the question I always get asked, especially, I mean, in the YouTube comments always, but especially on Instagram as well, what type of order block should I use? Because of course, we do have the three types here. Now, my answer to this is something that I've even discovered myself over time as well. It really doesn't matter the type of order block they use. It's more about the quality of it. Now, of course, this makes complete sense because if, for example, we had a setup and because I'm not seeing the engulf type, you think I'm not going to enter. If I have all my confirmations in line and, everything's picture perfect and, it's ready to enter, of course, it's not going to matter on the type of order block that we do talk about. It's more about the quality of it. And we're going to be getting into pretty much all of that, how do we actually find the higher quality ones as well? Now, part two, high quality order blocks. Now, there's a few steps in this, but I'm going to be going through two main rules that I always stick to. The first one's this, rule number one. The order block has created an imbalance below it once it has moved down. Now, of course, vice versa as well. If we're moving in an uptrend, that order block has created an imbalance moving upwards. Now, this example over here, it shows a bad quality one. Now, why is that? Of course, as you can see, we've created this standard order block that pushes up, and it's the last push up before the down move. The problem with this is if we were to look to enter any sells, this potentially could be on one of your watch lists. But the problem with this one is that price has nicely mitigated it already. So what happens is as it moves down, of course, as you can see, what we want to see is an imbalance created below, exactly like in this example over here. So as you can see, this last standard order block, the down move before the up move, it was completely engulfed, as you can see, upwards. You know, the next wick completely wiped it all out. And what's left? You've got an order block that's left sort of unmitigated, is what we would call it. Unmitigated, by the way, guys, is pretty much just when it's not been touched again. As you can see, this order block has been touched on the way down. And then, of course, again and again, and it keeps going down and down in that order flow. But the difference here, and what we really want to look for, is the cleaner order blocks, the higher quality order blocks are areas that have this kind of characteristic. You know, you've got a massive imbalance that appears just after it. So that's one thing that you definitely want to look at. Now, in terms of the second rule that I usually look at, the order block that causes a significant market structural break, they're the most important ones. Now, what I mean by this is this example over here. So what you're going to get sometimes, and this closely links to market structure as well, you know, everything comes hand in hand. But in this example over here, the reason that it's not as valid, of course, I'm not saying that you don't enter off this, and I'm not saying that I avoid these types of entries because I do enter them myself as well, of course, with my confirmations in line too. It's just the difference is this will create a higher quality order block because is due to this order block, this kind of push down before the up move, that we now have that confirmation. We've broken market structure to the upside, so now we're looking even more positive. So therefore, when price retraces downwards, we can expect to enter on something like that. The problem with this one, on the left-hand side, is that price hasn't broken any market structure up to the upside yet. So what that means is something as simple as this can happen. Let me just get my annotation tools out. Something as simple as this could happen. We have this high over here, and we're expecting that to be broken to the upside. So we're expecting some kind of breaker structure up to confirm our bullish market structure. Now, the problem is this, when we haven't broken that and we're expecting to enter on something like here, there's kind of, you know, there's not that 100% factor to this where, you know, if we had an order block that was lower down, if this failed, if this first area failed, we could easily say, okay, the reason for that is because we had an imbalance below and then price just went down to, you know, mitigate that next order block. But the confirmation that we get here is once we get that market structure, it's more confirmed. Once we get there, we're pretty much more confident in entering into that type of order block. And these are definitely two rules that I look at. Now, of course, when it comes to all of this, there's more confirmations that I always look at. So in terms of high quality order blocks, I do have a full checklist that I've actually introduced to my students and something that I always look at in terms of myself as well. But yeah, it's, you know, these two examples, definitely stick to them and always implement them. Now, guys, before we continue, I just wanted to take a moment just to say thank you. I mean, this year has been has been more than insane. I mean, it's now been a whole year since I've actually sort of opened up the YouTube channel. As you can see on the screenshot on the left, at the time, exactly a year ago, I had 1.2K subscribers, and now we're at the point where we're just about to hit 55,000 subscribers. So, kind of as a special as well, I just wanted to go through that video, you know, the 3 order blocks, and actually just sort of refine everything to a deeper level. But before we get into everything, like I said, it's been a whole year since I've started. And with that as well, the Diamant Capital Academy has grown ever so much as well, almost 1,000 students now. And the thing is, the impact has been insane. Now, not even to say that, oh, you know, we have this course and everything like that, but it's just, I could not be prouder with every single student, you know, having this community that's so active every single day, you know, their routine is exactly the same. The strategy is exactly the same. And that's the difference between us as well. Like a lot of smart money concept groups, you're going to get a lot of quality, but the thing is, you're not going to get that fundamental guidance that we here at Diamant Capital always look at. You would have seen in many of the other videos on YouTube where I've actually introduced the whole idea of fundamentals into your game. That's something that I do every single week with my students. I always provide a fundamental breakdown, what we expected, And then how is this going to link to our technical analysis? Multiple funded account passes from all the students, multiple testimonials. Check it all out on Instagram as well. You'll see it all there. But yeah, something recent that's happened as well. I've pretty much upgraded every single bit of the course, the elite strategy part. You're going to get access to these 20 new videos, going into everything in detail. But yeah, guys, that's pretty much just a little update on everything that's been going on. Honestly, could not be prouder. Now, part 3, talking about entry points. Now, with this, when I did introduce the whole idea of the 3 order blocks, this is exactly what I talked about. So the types of entries that you can have. Now, let's just say we've identified this standard order block that we're quite interested in. Now, there's 3 ways, or I would say generally 2 ways that you can enter it, but the last one's just a bit different. The first way is entering through the wick. Now, what this means is your entry is going to be, your entry limit would be, for example, touching the wick of the order block, and the stop loss would be just above the wick. Now, in terms of a bit more of a risky approach, and by risky, I mean it's risky in the fact that it might just hit the wick and it might just drop. That's the problem that I do find with this one. But of course, your risk to reward is going to be much higher because your stop loss is going to be smaller. How you would enter this, body entry, stop loss above the area. And then finally, a tight stop loss. I've even seen a lot of guys actually implement this where they keep their stop loss, body entry, and then the stop loss just above the end of the body as well. Now, personally, I wouldn't really advise that. And the way that I've been doing it, especially in all my analysis that I do send to my students as well, is this. I tend to use wicks a lot more. Now, the reason is because many, many times what you're going to see is if you do enter on just the body, for example, so let's just say we entered from up there. The problem with that is for a few pips, for maybe 2, 3, 4, 5, maybe even 10 pips, depending on what time frame you are, is it worth it? You missing out on that trade and you missing out on all that risk to reward, that positive risk to reward, when you could have just saved it by entering just a bit lower. Now, personally, I take more of a reserved approach. Even with being in the markets every single day, that's not something that I do. Might be a few times a week. But this is pretty much my approach that I've been taking, and something that, especially if you're starting out as a beginner, test everything out, see what works for you. But yeah, personally, I think this is the way that I kind of go about it and the way that I kind of advise as well. But always, it's up to you. Test it out in the markets and see what works for you. But yeah, now I wanted to get into some live markets and actually show how this is implemented. Now, for that, what we're going to be doing is we're going to be sticking to the higher time frames. The reason I say that is, of course, if we stick to the lower time frames, let's just say, for example, the 5-minute, you're going to get so many opportunities. Now, let's just look at this order flow. We've talked about order flow many, many times. Just a quick little thing, for example, these are the types of ways that you want to be looking at order blocks. For example, if it retraced again, this kind of area up here, that's the way you would kind of look at it. But what we're going to do, just for ease, we're going to be sticking to the 1 hour time frame. Now, what you're going to realize is when let's just say, for example, you're a beginner and you're starting out with this whole idea of order blocks and where I can get started. Like I said, you want to be looking at them rules again and start to implement them. Now, with this, I just want to showcase how it actually, when you plan it and then what actually happens when you execute it as well. There's many, many times where, for example, we were in this bullish momentum. You would have been wanting to enter. Let's just say, for example, you've identified this order block over here, but then price has actually moved further upwards. Like I said, there's going to be times where your order blocks fail. That's something that, you might look at a video about order blocks and you say, oh, it doesn't work because look, I can see this happen and everything. Just a little reminder, when you are entering on something like this, unless your strategy is to just enter on limits, of course, that's a bit different. But personally, I would definitely advise to use more confirmations. An example is the idea of fundamentals. If you know that fundamentals have changed and you want to actually be selling from now on, but you have this nice buy order block to the upside, to continue that structure upwards, why would you completely go against it? Something like that. But yeah, let's just get into all of that. When we're looking at the 1 hour order block over here, just a few examples of mitigations that we can look at. So over here, recently what we did have with Euro JPY, and this was actually a bit of analysis that I did send into the free Telegram as well. Let me just get that up for 1 second. Okay, so generally with the Telegram, I'm always sending an analysis in there. Let me just take this down for a second. So as you can see with Euro JPY, I sent that earlier on in the week, and I'll explain my reasoning behind it as well. The links into the free Telegram are in the bio, by the way. Okay, so here we go. Now with this, it's exactly the same thought process. Of course, there's a bit more that went into this, but in terms of the order block, what did I say? I wanted to see before we had this market structural break over here. This was the last down move before the up move. So that's the standard type of order block that we're looking at. Then in terms of the imbalance that it left behind as well, that's confirmed too. So this order block right here, it broke market structure upwards. And then also another thing, it left a nice imbalance just above it. So when I sent this analysis, I marked out this zone and it said, okay, look, we've hit it now. Now we're just going to be looking for confirmations to enter. And then what actually happened, as you can see, price completely rebounded from it. This is the type of thing that you want to be looking at in the markets. Again, even on the higher time frames as well, when we're looking at this 1 hour zone, nice sell area. It's a second mitigation type of order block over here. But as you can see, it and the order block that we're specifically looking at is this blue one. As you can see, this standard order block, it was this push up before the down move. And what did it leave? It left a nice imbalance just below it as well. So that's why, even looking on the high time frames, this order block was valid. And what did we get? We got a nice rejection down. Now from that, because we are in this kind of internal range, moving bullish, this type of order block was valid to me. If this had failed, what I would personally look at next would be this area down here. Now, of course, with this one, it's a bit different because it hasn't broken any significant market structure upwards. But what we do have is a nice imbalance above. Now, these are just two rules that you can kind of use. Now, again, what's the whole point of this video? I just want to go back to the start of it. The only three type of order blocks you need to know. What I really want to say about that is you don't have to be so, so zoomed in on just, oh, I can only use this order block. I can only use that type of order block. The fact is, when the area looks good and there's an order block, whether it's engulfed, whether it's standard, whether it's the breaker block, use it. Use it to your advantage, whatever it may be, whatever you think that works out nicely in that situation. Of course, what's that going to mean is there's going to be a bit of discretion about it. But hopefully the rest of your confirmations are not going to allow that to happen. Again, just to quickly explain, this type of order block up here as well, you can be really specific and say, oh, this engulfed order block up here, for example, if you wanted to enter from the body. But personally, like I say myself, I enter from the wick. So if I was marking out this point of interest, that's the way I would mark it out. So yeah, guys, I hope this video just gave a bit more insight into this whole idea of the only three order blocks you need to know that we did last year. But yeah, all links are in the description that you do need to know. And hopefully from now on, I'm going to be, more consistent on YouTube and uploading more and more for you guys. So definitely leave your suggestions down below. Please like, subscribe, and thank you for pretty much watching this video. I'll see you guys all in the next one. Take care.